Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. I get nuts.
With your host, Phil Grande.
What is coming to me?
And welcome to my podcast. You know, it really gets me upset when Wall Street and the jibber jabbers on these TV shows just don't tell the truth. Now, that's why you got to learn how to sell short. Because, see, when you know how to sell short as well as go long, it doesn't matter anymore. That's right. You know, you don't have to worry if the stock's going to go up or the stock's going to go down because you're purely following the money. So if the money is going down, you short. Unfortunately, for people who don't know how to sell short, they got trade to perfection. If all you're doing is buying stocks and you listen to all these people who just lie through their teeth and you're going to follow them, you're going to lose money. It's crazy. And here, let me explain what I mean. Listen to this. This is all BS. For heaven's sakes. Start this.
And the big six banks continues to say that the consumer is strong, resilient. They all use that word, Joe. And
that's a bull-faced lie. Of course they're going to say that. The consumer is strong. He's resilient. That's just not true. Not true at all. I mean, for God's sakes, job cuts between October 2024 and October 2025 came in 3 times worse. We had 3 times more job cuts between 2024 and 2025 than we had in 2023 to 2024. That's a bold-faced lie. They increased by 153,000 over a year. That's 3 times worse. Bankruptcies up 20%, 27, actually it's 32% now for consumers and it's 49% for businesses. Delinquencies, I don't have to go through all this, you know, delinquencies. We've had the worst delinquencies in home mortgages, car payments, credit cards. We've never had the amount of minimum card payments. I mean, it's historic. Just paying minimum. What are they talking about? That the consumer's strong. No, the consumer's not strong at all, nor is our economy. And then they say,
we're in a pretty good place.
Pretty good place. Let's see. Stagflation, is that a pretty good place? I don't think so. And remember what happened, and Powell in September, he masked it so nobody would talk about it. OECD. What's OECD? OECD you can trust. They're the Organization for Economic Cooperation and Development. They're an individual group. They're not political. And they got red flags all over the place, hitting stagflation. And stagflation is just simple. It's just when you have low growth in your economy, which we do, we got a terrible weak labor market. See the job openings lately? Unbelievable. And then you take those two, slow economic growth, weak labor market, then put into that inflation, which we do. You know, we're still at 3% inflation. How is that a good place, being at 3% inflation? I don't think that's a good place. How are we in a good place if the top 1% wealth increased by $42 trillion over 10 years, but Main Street, their wealth increased by $335? Is that a good place? I don't think that's a good place. Doesn't make any sense to me. This is just craziness. I mean, what they say. You know, look, hey, there's another one. We're in a good place. Look at the student loans. The good news, the bad news. Well, no tax on tips. That's a great thing. That's good news. They shouldn't be taxed. Now, that's going to put into the economy $2.5 billion. Here's the bad news. The student loans now, they got to pay them. No more free. You got to pay them. That's $50 billion coming out of the economy, only $2.5 billion going in because of the tax. Let's talk about QT, okay? Let's talk about QT. Powell's is using QT to bring inflation back to 2%. It didn't work. It's not working. Remember what QT is. All you're doing is trying to extract the money, the liquidity that's just in the economy. You're trying to pull it back out. Because all this QE that we had created massive inflation, massive liquidity. You have to pull it out. You have to pull it out. Well, we're not doing a good job. QT to pull it out did not work. So how in the hell are we in a good place? QT's not doing the job. Powell's been lying to us. Are you kidding? He can't bring inflation back to 2% using QT? For God's sakes, 45 months in a row. He's dumping every month $60 billion. I'll repeat, 45 months in a row, every one of those months, he's been dumping $65 billion, trying to get liquidity out of the market to bring in inflation back down to 2%. He can't do it. He's 100 points away. 100 points away from bringing inflation to 2%. You goes, well, that's not much. Well, let me draw an analogy. Let's say you're building a bridge, 14 miles. You get and you're in charge of the project. You're on vacation, and you get a call. Hey, boss, we got a little problem here. You know that 14-mile bridge that we built? We missed it. We missed it by 7 miles. We missed it. That's pretty bad, isn't it? Half. Well, it's just, when you say he's 100 points away, it's that bad. So how can he say we're in a good place? Powell screwed up. Inflation is still elevated at 2%. So let's say, for 45 months, he's been trying to get inflation back down by pulling out the liquidity in the market. It's not working. You can't get that 3%. You can't get past that 3%. The labor market's terribly weak. And by the same token, remember, we're in a good place. How can you be in a good place when your three banks, China, Japan, and the UK, won't loan money to you? They're not loaning money to us. They won't loan money to us. They're buying gold instead. They've been dumping our treasuries at a rate of $80 billion over the past 11 months. How can that put us in a good place if our bankers won't loan to us? They're dumping the treasuries they have, and Trump, he's got to be paying $7 trillion for the next 3 years, right? $7 trillion each year, and he can't get the money long term. He's borrowing short-term notes. He's borrowing T-bills. He's getting T-bills. How is that a good place? I don't think we're in a good place. I really don't. When Powell's worried, remember what happened in September, what he did. He lied. In September, remember, he received a 1-2 punch in September. We're in November. That's not long ago. He's worried. He was worried because the OECD, the Organization for Economic Cooperation and Development, they're a good organization. They're not political. They came out and said, hey, you got a real problem here, Powell. They gave him a report. One report said and showed the U.S. economy is in a state of early, quote, onset stagflation. In other words, we have just been given in September, a toxic 1-2 punch. Our economy is slow. We're not growing the way we should be growing. It's slow. Slow economic growth. Prices are still rising. We can't get from 3% to 2%. That's a real problem, a big problem. That's stagflation. But remember, we had stagflation, we had inflation in 2022, and they lied about it. the Powell's group lied about it. Not Powell himself, he didn't know where he was, but his head guy is I can't remember his name now, but his head guy, Bernstein lied. Bernstein's been with him since he was the first year he was in the Senate. Yeah, Bernstein. Yeah, he went to college. He studied music. Now he's the head of the economy, right? Under Biden, that worked out well. So think about this. So we are really in stagflation in 2022, but they denied it. They denied when we had 2 quarters back to back were negative. Oh, no, we don't have that. They said, don't worry about it. We got so many jobs, it doesn't matter anymore. No, there's no such thing anymore. Don't worry about inflation. Don't worry about it. No. Now, remember, the reason we have prices still up. Now, we do have prices still up. I mean, when you go to the grocery store, coffee's still up. Okay, a lot of things. Meat's still up. Now, there's a lot of stuff that's down too. Remember, there's a lot of things that are down, but we still have a problem. Coffee is up 14%. Meats are up 9%. Shelter's up nearly 3%. Eggs are down. That's good if you like breakfast in the morning. Oil, that's good. That's down. That really helps everybody. That's a big one, boy. That's great. Mortgage rates are still, they're down. That's good news. 7%. They're down by 7% since when Biden was in office and Trump's in office. So, but my point is that the reason prices are going up is because when people are out of work, when people are fearful of going from part-time to no time, okay? Part-time to no time, full-time to part-time to no time. When they get fear, or they drive out of their driveway in the morning and they see their neighbor, hey, aren't you going to work today? No, are you sick? No, I lost my job. Oh my God. That's where we are now. How's that being in a good place? The reason why prices are up is when people are out of work, they're worried. They don't want to lose their jobs. They start saving. But here's what happens. It doesn't matter because businesses at first will start cutting prices. They know their customers. They know their customers are hurting, so they start cutting their prices. But that never works. And by the way, if you keep cutting and it's not working, you're going to go out of business. You got to keep your margins. If anybody has a small business, you got to keep your margins no matter what. But anyways, let's go back to what occurs. The reason why prices go up, even when the businesses start cutting, because it doesn't last long, because we have baked in, the wholesalers bake in their prices. So they manufacture goods, the wholesaler gets it, and the wholesaler sells it to the store. So it's already baked in, so you can't keep prices down. So we're not in a good place because we can't keep prices down. Inflation's up. That's crazy. And by the way, something's really wrong in the economy. You're heading towards stagflation when stores start cutting prices. And all of a sudden, prices keep going up. Boy, then that's a big red flag. So, since September, Powell has not been honest with us. He hasn't been honest at all. I don't believe he's been honest with the president.
You got 2 minutes.
He hasn't been honest with us, we the people, we the consumer. When he received from the OECD that 1-2 punch where they came out and they identified red flags all over the place for stagflation, he never talked about it. He doesn't want us to know about it. Powell masked it. That's why he kept it quiet in hopes that QT, by draining money out of the economy, taking money out of the economy because of all this QE. So he said, well, I'll just do QT. I'll remove that money. It didn't work. Powell's dumping $60 billion a month in treasuries and it's still not working. He thought that would solve his inflation problem. He thought that would solve his weak job problem. That would solve the stagflation problem that was sneaking up. It didn't. It didn't work. And by the way, talking about didn't work, do you know that, remember Trump first said this here? about tariffs. He said, let me get it here for you, if I get it. For some reason, I can't get it. Here it is.
How do you make sure that these CEOs, that these companies don't, in fact, pass on the cost of tariffs to their consumers?
They cost Americans nothing. They made a great economy for us.
No, he was wrong. And then he said, you know what? He said, I'm going to give everybody a check for $2,000. Everybody for $2,000, like I did with COVID, but I'm going to give it as a dividend. Well, that's a big problem. What they find out with the dividend? One, legislation he has to go to Congress to get that approved. Yeah, he can't just do it. And secondly, you know what that's going to cost as a dividend? It's going to cost us, you and I, the taxpayer. It's going to cost, instead of $200,000, it's going to cost us gross $600,000. As a dividend, $400,000 is going to be on our backs to give it as a dividend. So that he hasn't got to go. So he hasn't got to go to Treasury. He doesn't want to go to Congress. Rather, he doesn't want to get approved. He wants to do what he did with again COVID. So you should read up on that. It's really interesting. Everybody's supposed to get $2,000. Not going to work. Not going to work. I'll be back with a lot more and some stocks. What's going to go on with the market?
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from. All that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
I think this is kind of a buy in the dip market, particularly in AI.
Oh, yeah, buy in the dip. That's true. You want to buy in the dip, all right. Like cost average down. You want to lose money. You don't buy on a dip when the trend is going down. If you could see my computer, I would show you. If you take NVIDIA, some of you can see what I'm saying here. Here, take NVIDIA right here. Okay, if you take NVIDIA, and you see when the trend is going down, it's off its high and it pulled back, and you buy in the dip, that's the worst place in the world to buy. You'll lose money almost every time. What you want to do is when it pulls back, here I'll put it on a line chart like this so you can see it better. Here's what you want to do. Buying on a dip or cost averaging down is a con job, okay? Nobody will tell you that, but it's a con game, all right? The way it works is this here. If you got your stock going up like this, going up and up and up, and it pulls back, you don't want to buy on the dip. Let it go up and make its new high. Then everybody says, yeah, but again, you left this money on the table. No, I already got that money. I caught that money on the way up. So if I caught that money from here on the way up, I caught that. Why do I want to buy in the dip here? I'll start buying here again. That's where you start buying. Cost average down is ridiculous. You know, cost average down, no. If you're making all-time new highs and it pulls back a little bit, makes another all-time new high, add. Pulls back, make another all-time new high, add. As long as you got higher lows and higher highs, that's where you add. The idea that you're in the stock for $210 and it drops down to 174 and you're going to start buying at 174, what are you, nuts? Because from 174 to 210, you got all kinds of sellers. You got sellers. You got to get up through those sellers. You got to take those sellers out. What are you, nuts? Why would I do that? I'm going to make sure one of my stocks is breaking out to new highs. That's the one I want to buy. The one's breaking out to all-time new highs. Why do I want to go and get into a fight and fight everybody on the way back up? So if I already made my money and it pulls back, I got to fight everybody. And I don't have any insurance I'm going to make it up to the top. But if I make a new high where there's no sellers above you, that's how you buy. That's how you make money in this business. That's crazy. But anyways, I want to get back to the stock market a little bit here too. What's going on? Look, this market is screwed, okay? But it's going to take a long time for us to get a correction or a crash, okay? It may happen in the first, second, maybe third quarter of next year. It may. But they've taken this market now, and they got total control of it, okay? And they with all these stock buybacks. Now, here's what he's going to do. Powell is saying, I'm going to stop QT, and I'm going to add $300 billion to our money supply. Oh, by the way, I made a mistake. I said, Willie told me, I gave you the wrong number on the, give you the right number, give you the wrong number on that $2,000 check, okay? This $2,000 check, the way that's going to work, it's going to be, I think I have it here. It's about, where'd I go? I know I should have gone back here. No, I can't find the damn thing. Okay, anyways, it's going to cost $600 billion. If he's going to give everybody a check for $2,000, and he doesn't want to go through Congress, it's going to cost, instead of $400 billion, it's going to cost $600 billion. And in other words, it's going to be a net loss to us about 400. It's going to cost us about $400 billion. We're going to be in the hole $400 billion if we do this. Okay, so it's really crazy. You have to read up on it, but it's just insane. All right. But I want to get back. Let's get back to the market here. So QE is to put money into the economy. It's very inflationary. QT is they're trying to reduce the money. Now, what's Powell saying? He said this week, in 2 or 3 days, he's going to put $300 billion in. But wait a minute, where's the inflation? He never got us back to 2%. It's at 3%. So he didn't reach his goal to bring inflation down to 2%. It's at 3%. And now he's going to turn around and he's going to do QE again, is what he's doing. He's going to print all this money, put $300 billion into the money supply, and that is really going to hurt us big time. That's really inflationary. This guy doesn't know what he's doing. He doesn't know what he's doing. So again, the banks, I want to talk a little bit about the banks. The banks were doing okay for a while. They were doing okay for a while, but they're not doing okay for a while. I mean, now, no longer. These banks are starting to make some new lows. Look at Goldman Sachs today. Look at Goldman Sachs. It's starting to make a low. On my chart, my Pro 2, is showing money's pouring out of Goldman Sachs. Money's pouring out of J.P. Morgan. These banks, money is coming out of these banks right now. Those banks were holding in there nicely. All the money is coming out of the MAGs and ARK, all these tech stocks. And if NVIDIA comes out, I think it's what, tonight or is it tomorrow?
NVIDIA tomorrow.
Tomorrow. If NVIDIA misses their earnings, wow, you better have a parachute. That's going to be very bad. And they could miss. They could miss, okay? But I think they'll rig it so they don't, okay? But I don't know. And that's another thing. See, when you know how to sell short, you know how to go, you don't care. Who cares? But can you imagine you're sitting there, you don't know how to sell a stock short, and now you're with NVIDIA, you're in NVIDIA, you got about $5,000 in NVIDIA or $8,000, and never stay in earnings. That's insane. It's not worth it. But can you imagine if you're in and you're holding on to it, you're a buy and hold person, which is crazy. You're a buy and hold person. You imagine what's going to happen if NVIDIA doesn't meet its earnings? There's going to be a panic. I mean, panic. Get me out, get me out, get me out. And all the big institutions have been selling into NVIDIA as we're getting to the earnings. That's right, they're selling into it. They're selling into it. Isn't that crazy? That's what they're doing. So what I'm trying to tell you is right now, there's no place to hide. Okay, if you take your tech stocks, they're in trouble. You take your bank stocks, they're in trouble. You got 3 stocks. You got like Lilly, you got Merck, you got, these are all your Johnson & Johnson, these are your healthcare. You got a couple stocks, Moo, that's still a very strong stock, Moo. But we haven't got much on the board anymore. Everything's really a short right now, okay? And especially, as I said, the tech stocks are really in deep trouble. So the only thing that's doing well, okay, is your, again, is your healthcare stocks, okay? And, you know, because they're value stocks and people are running towards those. Now, the other thing, remember, is that when you're looking at this market, and let me just take a look at it here. When you're looking at the stock market, watch IWM. I've had my gang on shorting IWM for a while now. Short IWM. Because IWM tells you the truth about the economy. They don't mask anything. IWM is the roots, is the base, it's the whole economy, okay? At the end of the day, when your candlesticks go up and down all day long, at the end of the day, you look at your trend, and your trend with IWM is down. If this breaks, what we call our 68% on our chart, wow, that's going to be huge. So watch IWM, that's the important thing to watch. It's going to tell you what's going on. That is so important, okay? Now, the other thing is, so if your techs aren't doing well and your banks aren't doing well, you have a handful of healthcare stocks, you've got to learn how to sell short. It's that simple. And again, if you're in a 401k, you don't want to get slaughtered. All you have to do is buy SDS. We'll show you how to do it. So when your 401k is coming down, you're making money in the spiders. It's called an inverse. We'll show you how to do it. So you're not going to get hurt when there is a correction. Now, people don't believe there's going to be a correction. I get that. I get the hate mail. I get that. I understand that. Because people don't want it. They don't want a correction. So they get mad if anybody talks about it. These AI stocks are in deep trouble, okay? And what's happening is these AI stocks have gone so crazy. The valuations are stretched. They've gone so nuts that stock prices are just insane. And somebody's going to get really hurt in these AI stocks. Now, they're all betting that the government's going to take over, that the government's going to come and take all these, be a partner with all these companies that are working with OpenAI. I mean, like Oracle. Look at Oracle is having trouble. And so they're depending on the government is going to come and work a deal with OpenAI, and the government is going to be a partner with Oracle and AI. This is what's going to happen. Trump's going to partner up with all these companies. You watch, because he could stop a total crash by doing that. So, but again, be ready just in case. Now, the other thing is, you want to, if you keep watching ARK, I find that to be one of the best barometers, ARK, ARKK. That stock has never let me down. That and IWM. When I see ARK going down, I'll start shorting it, like my IWM. They're never wrong. Okay, the sentiment is always clear. They're warning you. They're giving you a warning. Okay, they're clear. So keep your eye on those. Okay, and I'll repeat again, IWM. That is so important. So important. Now remember, the 10-year Treasury yield is our economic barometer. Okay, because they set the rates for the national debt, for the credit cards, your automobile, mortgages, business, and when those yields start climbing, you remember that's not good. And the yields are climbing. And what causes yields to rise? Inflation. And our inflation is going nuts. We can't get back to 3%. So remember, when you're watching the yields on your 10-year Treasury going up, first and foremost, it's QT. That'll cause it. Inflation, okay? And again, if tech stocks earnings, like if NVIDIA, if that reports tomorrow and it's disappointing, yields are going to rise. And remember, when you got yields rising on your 10-year Treasury, that's indicating, okay, that there's a problem. Always remember that. The one thing about the bond market, always tell you the truth. When yields rise, after a dramatic drop in the bond prices, you can bet on a correction or a crash. You can, all right? And you also watch, if all of a sudden NVIDIA goes down, okay, and you watch gold. Gold will rally. My miners will start rallying again. But rising yields are important, okay? Because again, it pulls money away from stocks. You got to know that. You got to watch that 10-year Treasury yield, and you watch that IWM, their small mid-cap stocks. It really will help you and guide you. I'd be happy to show you how to read these. If you know how to sell short, and you know how to read the messages from the market, especially the bond market, you're going to be just fine. Just think about it. You don't have to worry about the market anymore. If it's going to go up or down, you don't care. Because it's not about being right or wrong anymore. It's about following the money. Pretty easy to watch the money go down, money coming out of the stock, right? Valuations are stretched. They're insane. Worst fundamentals we've ever had. Look at the fundamentals. We have the worst concentration ever in history. All the money's going to just about 10 stocks. We got the worst breath in history. Everybody's ignoring it. Worst breath in 23 years. Worst stock buybacks ever. Worst increased money supply. Worst margin debt. On top of the valuations that are stretched. But doesn't mean get out of the market today. By watching the money, following the money, you'll know exactly when to get out. Join my gang. We'll show you how to do that, okay?
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to